Namaste. Good morning. So we are entering the part 2 of our discussion, that is rates of taxation. The part 2 of our discussion, that is rates of taxation. Basically, our rates are divided into two. One as per Finance Act, which is there as a charging section in section 4. Which is there as a charging section in section 4. And there are quite number of rates which are given as part of income tax. What is meant by a charging section? What is meant by a charging section? If the rate is inherent in the section. If the rate of taxation is inherent in the section, it is known as a charging section. Section 112. Long-term capital gain is taxable at 12.5%. That is not there in Finance Act. That is there as part of Income Tax Act. Section 111A, short-term capital gain on which security transaction tax is paid is taxable at the rate of 20%, part of income tax law. Okay, where the rate is inherent in the section, then it will come as part of income tax. So, okay, you will write it as two branches. Okay, you will write it as two branches, and I am writing okay. Rates specified in the Finance Act. Rates specified in Income Tax Act. So there are some rates which are specified in the Finance Act. Okay. Now, this is popularly known as old regime. This is popularly known as old regime. Though I am not happy with that particular word. Old regime should not be the right word to be used, because there are quite number of the finance minister in the last budget itself said 35 to 40% are yet to migrate. She said that 60% have migrated, which means somewhere around 35 to 40% is yet to migrate. So you cannot call it as old regime. So our classroom purposes, I will call it as normal tax regime. Okay. And this is known as concessional tax regime, which is in section 115, various parts of 115, starting from BAA to BAE, it goes up to. So this is concessional tax regime, which is given under income tax law. This is also popularly known as default tax regime. This is also popularly known as default tax regime. Why is it known as default tax regime? Suppose I am the employer. Suppose I am the employer. I give a form to you on 1st of April to asking you to give you your house rent allowance, rent paid, your investments, various other, if at all there are any housing loans, etc., other incomes. You fill in that form, but did not choose the method. Whether you want to go under the Finance Act tax regime or under the concessional tax regime, you're not specified. You're not specified. The law has to, as is telling the employer, understand he is following concessional tax regime. Where the assessee is silent, then he will fall under concessional tax regime. So, the old tax regime or the normal tax regime or the Finance Act tax regime should be chosen by the assessing. If he has not chosen, you will come under the concessional tax regime, and that's what is popularly known as default tax regime. Default tax regime. Am I clear to you? So, right, all special rates are coming under income tax law only. All special rates are coming under income tax only. So here we only tax the normal rates. Here it will only be normal rates. All special rates will fall under the income tax law only. Am I clear to you? Okay. I start with rates of taxation for individuals as per Finance Act. Rates of taxation for individual as per Finance Act. Rates of taxation for individual as per Finance Act. Okay, as I told you, the last class didn't go recorded, so you would have already written this. For those who are new to the classroom, they can write it. Okay. Okay. Individuals below resident individuals below 60 years and non-residents. Non-residents irrespective of age. Senior citizens 60 years or more. Super senior citizens 80 years or more. Okay, right? So these are all the, this is how the categorization is going to be. Okay. Senior citizen, here also I should use the word resident senior citizen, resident super senior. Okay. So basic exemption limit. Basic exemption limit is here going to be, okay, 2,50,000, 3 lakhs, 5 lakhs. Basic exemption limit is here going to be 250, 3 lakh and 5 lakhs. The next slab is basic exemption limit to 5 lakhs. Basic exemption limit to 5 lakhs, 5%, 5% not applicable. Not applicable because the basic exemption itself is 5 lakhs, so it is not applicable. Twenty percent, 20%, 20%, and more than 10 lakhs, 30%, 30%, 30%. So I told you that there is a way up to 10 lakhs, we know what is the tax. Up to 10 lakhs, we know what is the tax. In this case, it is 1,12,500. Here it is 1,10,000. Here it is 1 lakh. So somebody gives you an income of 15 lakhs, you will not wait to compute right from first thing. 5 lakh into 30% plus 1,12,500. Okay, plus 1,12,500. Okay, for all those who joined the class now, I had an issue with the recording of the first class. So what I did is, I'm not very good in recording at home or recording without students. So, but I did the first part, the interpretation of statutes part. I did the first part. The second part, taxation, that is rates of taxation. I can do it fresh from the classroom. That's why I am, whatever you have listened to the previous class, you are again listening now. Am I clear to you? So these are all the rates of taxation as per Finance Act. As per Finance Act applicable for an individual. as I was saying, the biggest change happened in 115 BAC, the default tax regime or the concessional tax regime for individuals. Okay, the biggest change happened, and we have nailed it in such a manner where at the beginning I told you 60% have migrated. Might be after this year 90% would have migrated. There will be rarely some who are claiming so many benefits. That is, they have self-occupied property, they have many deductions under Section 80, multiple deductions under Section 80, including donations, political donations, including 80C, 80D, DDB, like that, multiple. The in case of individuals, it is going to become the rarest scenario of having someone using this particular tax regime. Okay, but anyhow, so we are going to 115 BAC. Section 115 BAC, concessional tax regime. As I told you, it is part of income tax law. As I told you, it's part of income tax law. So, level of income, rate as a percentage, tax, cumulative tax. Okay, level of income, rate of tax as an percentage I'm going to tell you, and the tax component of it and the cumulative of tax. Up to rupees 4 lakhs. So the basic exemption limit here is 4 lakhs. The basic exemption limit here is 4 lakhs. Up to rupees 4 lakhs, there is no taxes associated. The next level is 4 lakh 1 to 8 lakhs. The tax rate is going to be 5%. So the difference is 4 lakh. 5% comes to 20,000. The cumulative tax comes to 20,000. 8 lakh to 12 lakhs. The taxation is 10%. So 40,000 to 60,000. Remember the 60,000, because when I am going to talk about 87A rebate, I'm going to tell you that the rebate is 60,000 or actual tax, whichever is less. Why? How the finance minister made up to 12 lakhs no taxation is not by slab. It is by providing rebate under section 87A. So the 60,000 up to 12 lakh, a person will pay 60,000, which I am going to give it as rebate. This technically means if you are earning 12 lakh 5,000, it is not that 5,000 is taxable. It is right from 4 lakhs, it becomes taxable. Okay. Okay, at least there is a marginal relief of rebate. If you are earning 14 lakhs, it is not 2 lakhs which is taxable. It is right from 4 lakh 1 which becomes taxable. Okay. So the benefit is passed on by way of a rebate and not by way of a rate. Again, increase to 4 lakhs, 15%. So it will become 60,000. It will become 1,20,000. Again, increase by 1 lakh. It will become 20%. It will become 80,000. It will become 2 lakh. Again, increase by 30%, no, 25%. It will become 1 lakh and this will become 3 lakhs. So more than 24 lakhs. it is taxable at 30%. So this is the new tax regime that is being taken as an amendment in this particular financial year. So even the one biggest amendment that happened was this. So now you should understand that if I give you the income level of 30 lakhs and ask you to find out under the new tax regime, it is very simple. 6 lakhs into 30% plus 3 lakhs. 6 lakhs into 30% plus 3 lakhs. That will be the level. Am I clear to you? Am I clear to you? Okay. Next, I am going for rates of taxation for firm. Okay. Rates of taxation for firm. Rates of taxation for firm. Interestingly, you will find here only the tax rates is only as per the Finance Act. The tax rate is only as per the Finance Act. There is no question of any concessional tax regime for firms, including LLP. Okay. Is there any basic exemption limit that is available? No. Okay. Normal rates of taxation at 30%. When I say normal rates, I mean only Finance Act based rate and not otherwise. Am I clear to you? Okay. Now I am going for rates of taxation for companies, domestic companies, rates of taxation for, okay, I do both domestic and foreign company. Okay, I think this is the point we stopped in the last class also. Rates of taxation for domestic as well as foreign companies. And I take it as an opportunity to correct a mistake which I did in the last class while quoting a section number. So kindly do the needful. Okay, particulars. Okay, domestic companies whose turnover does not exceed, okay, 400 crores in the financial year 23-24. Remember whatever I am writing it in blue is your amendment. Okay, 23-24. Why is that 23-24? For the financial year 25-26, audit of accounts and all other formalities would have been over only for the year 23-24. Suppose the law has said 24-25. The first installment of advance tax is due on 15th June. Before that, many audits would not have been completed. The turnover would not have been determined. So the law is clear. Exceeds 400 crores in the financial year 23-24. Okay, the rate is 25%. Other domestic companies, the rate is 30%. Foreign company, the rate is 35%. This was amended last year. So if you are referring to a old scanner, you will find the rate as 40% from the financial year 24-25 itself. Not your amendment, the preceding amendment itself. It is changed to 35%. Now I go according to the new tax regime. Okay, rates as per concessional tax regime. Section 115BAA. Section 115BAA. This is the mistake I did, so I request you to correct in your notebook. Okay. Companies not falling under 115BAB, 22%. Companies not falling under 115 BAB, 22%. Okay, I gave it the other way in the classroom. Please correct it. Section 115 BAB. Section 115 BAB. Manufacturing companies which commenced operation on or after 1st October 2019 to 31st March 2024. May I? Okay. Manufacturing company. So, your immediate preceding year, which you will very much remember because for that only you are doing the audits now, etc. 2024 is an election year. In the election year, union elections. In the election year, budget will not be presented on 1st of Feb. In all other year, 1st of Feb. The new government should form and then only budget will be presented. On 23rd July 2024, budget was presented. Indexation benefit for LTCG was removed and LTCG became taxable at 12.5%. So, students who are studying the for the financial year 24-25 would have studied two rates. Up to 22nd July with indexation benefit, from 23rd July without indexation. So, every 5 years this will happen. 2024 minus 5, 2019. That's why you see a unique date of 1st October 2019. It is not 1st April 2019. It is 1st October because that is also an election year. That is also an election year where budget was presented late and this was introduced by the Finance Act 2 of that year, 3 of that particular year, where that's why you have a unique date starting from 1st October 2019. And I want the class to note down this benefit is no more there. A manufacturing company commencing operations this year, 25-26, or even last year, 24-25, will only fall under 115 BAA and not BAB. You're clear? You're clear? So this is for this is for this particular period only. That is 1st October 2019 to 31st March 2024. Income from manufacturing operation. Other income. Am I clear to you? Am I clear to you? So, as per the concessional tax regime, Now the rate you can say it as 22%. Only if it is a company, because that was the time our Prime Minister was promoting more of Make in India. Okay. So only for a period of 5 years or 4.5 years, starting from 1st October 2019 to 31st March 2024, we had this unique rate of 15% only for manufacturing operations. They have to forego a lot of things, as I told you. When assessment of company is going to be discussed, we will discuss all those things. Do not worry. Okay. Rates of cooperative society. Rates of cooperative societies. Again, they also don't have any basic exemption limit. Up to 10,000, 10%. 10,000 to 20,000, 20%. More than 20,000, 30%. So if somebody says that the cooperative society's income is 40,000, you will say 20,000 into 30% plus 3,000. First 10,000, 1,000 rupees. Next 10,000, 2,000 rupees. So 3,000 is the total. Always, even in Finance Act, they have written like that. Okay. More than 20,000, such excess into 30% plus 3,000. Okay. And then the same special rates of taxation. Same special rates of taxation as like companies. As like companies, only the section changes. Okay. The special rates of taxation is going to be the same. The special rates of taxation is going to be the same. 115. Okay. BAD, cooperative societies not falling under this was only for 1 year. Shall I? Okay. So trust and all we will see when again we are going to discuss all these things. I want to start with this because in PGBP some questions we will do tax. Though I have assessment of companies where we am going to repeat all these things, cooperative societies, trust, everything. But in PGBP, sometimes compute tax. In capital gains, sometimes compute tax. At that time, I want you to refer to this. That's what at the beginning itself, I am giving it once to you. Now, I go into surcharge. Okay. Surcharge is tax on tax. Surcharge is computed on tax. So it's tax on tax. And remember, surcharge is also divided into specifically for individuals and for other organizations, companies, firms, etc. Surcharge is also different for individuals and other organization as per concessional tax regime also. For example, for individuals, refer surcharge as per Finance Act. Whereas for other entities like companies, cooperative society, surcharge is 10% as per concessional tax regime, which is part of Income Tax Act. Okay, right? It is very easy to remember tax rates only if we know what is surcharge rates. Okay, we will feel tax rates. I'll better remember tax rate than surcharge rate. You cannot confuse so much in the name of surcharge. Let's look into that. First, I am working out surcharge for individuals, HUF, AJP, and also AOPBI. AJP is artificial juristic person. Up to rupees 50 lakhs, surcharge is nil. Income exceeds 50 lakhs, but not 1 crore. Surcharge is 10%. Income exceeds 1 crore, but not 2 crores. Surcharge is 15%. Shall I? Shall I, friends? Okay, right. Now, we need to be more cautious. Income other than section 111A, STCG on which STT is paid, LTCG and dividend. Income other than section 111A, both types of LTCG and dividend exceeds rupees 2 crores, but not 5 crores. Income other than these things exceeds 2 crores, but not 5 crores. On such income, 25%. On such income, 25% on STCG taxable under 111A, LTCG and dividend. It continues to be 15%. It continues to be 15%. Repeating, income, salaries, business or profession, okay, other sources put together exceeds 2 crores. In other sources, I will not include dividend. But on that, what is the tax? For that, surcharge will be 25%. For these three things or four things technically, because LTCG is also divided into two. For these three things, 15% is the rate of surcharge. Am I clear to you? Am I clear to you? The same statement we are repeating. The same statement we are repeating. It exceeds 5 crores. Am I clear to you? And now please note down this. However, this increased surcharge is not applicable if assessee is under default tax regime. In other words, maximum surcharge under concessional tax regime is 25%. This additional 37% slab is not applicable if assessee is under default tax regime. Am I clear to you? Okay. Okay. surcharge for other entities. Nature of entity. Income does not exceed 1 crore. Income exceeds 1 crore but not 10 crores. Income exceeds 10 crores. Firm. Right. Nil. Companies, domestic companies, falling under Finance Act. Domestic companies falling under Finance Act. Okay. Again nil. 7%, 12%. Foreign company. Two percent and 5%. Companies taxable under 115BAA or 115BAB. 10%, 10%, 10%. Irrespective of the income level, they are taxable at 10%. The surcharge rate is 10%. Irrespective of the income rate, the surcharge level is 10%. Same like company. Am I clear to you? Okay. Up to this is variant. Now I am going to go to special rates of taxes, which is for all. There is no variation of individuals. There is no variation of other entities, etc., which is for all. Special rates of taxation. Section 111A STCG, on which STT is paid both times, at the time of purchase as well as sale. Section 112A LTCG, on which STT is paid. Section 112A LTCG, on which STT is paid on the first 1,25,000, okay, nil. On the first 1,25,000, nil. On the balance, okay, 12.5%. On the balance, 12.5%. On the balance, 12.5%. Section 112. Section 112. Other LTCG. Other LTCG other than 112A. Okay. Other than 112A, 12.5%. What is the special provision? Any idea? Any idea? What is the special provision? No indexation. That's okay. Yeah, no indexation. Right. Now I'm asking you, is there any special provision applicable? So what happened? On 23rd July, the finance minister announced that she is reducing the rate of taxation to 12.5% and removing the benefit of indexation. And then the industry went into huge issues. And then she said, I will reinstate indexation, which did not happen, which happened in a very interesting manner. For individuals and HUF, first listen, then we'll take down. For individuals and HUF, if the asset sold is an immovable property, repeating, only for one set of assets, individual and HUF, only for one form of capital asset, immovable property. If the rate of taxation by applying indexation, when you apply indexation, the rate becomes 20%. Okay, by applying indexation, if the rate of taxation at 20% is lesser than 12.5% without indexation, then assessee can opt. Remember the brainwork of finance ministry. They did not make this amendment in capital gain chapter. They made the amendment only in 112. They made the amendment only in 112. I have a reason for making you to understand this for some time. Okay. Remember, in capital gain chapter, no index. You cannot claim it. So let us take that I have a asset which I sold for 1 crore, my dear friend. I have an asset which I sold for 1 crore. By not applying indexation, I purchased it for 30 lakhs. Now my profit is 70 lakhs into 12.5%. Now my profit is 70 lakhs into 12.5%. Are you following? Okay. By applying indexation, I am getting, let us take for example, as 65 lakhs, I indexed the cost of acquisition. So my profit becomes, capital gains become 35 lakh into 20%. $70 lakhs into 12.5%. 8 lakh 75,000. Whereas 35 lakh into 20%, 7 lakhs, which is beneficial for me. Okay. But surcharge will come. Why? My income is 70 lakhs. This is the beauty of the amendment. They did not make the amendment as part of capital gains chapter. While computing my total income, I will take 70 lakhs. While computing my total income, I will take 70 lakhs. While computing tax, I have two options. With indexation, 20%. Without indexation, 12.5%, whichever is less. But my income would have exceeded 50 lakhs. So that is why they brought it as part of this law. Okay. LTCG on sale of immovable property by an individual or HOF where indexation benefit is availed, become 20. Am I clear? Is it clear to you? Okay. Winnings 30%. I assure you, just that I'm consolidating. Every chapter wise, we are going to again read. You will be able to very easily remember, understand it. Okay. At this junction, I'm just consolidating. Okay. Right. And then comes the last part, health and educational. Health and educational cess. 4% on income plus surcharge. 4% on income plus surcharge. Okay. So we divided rates into normal rate, Finance Act, and concessional tax regime. Concessional tax regime is now applicable other than firms for everything. Okay. Of course, trust and all does not fall under because they are going to get the income itself exempt. So all other people can avail the concessional tax regime. Am I clear to you? And the special rates of taxation, which is basically for capital gains and winnings. In that too, short-term capital gain is taxable at normal rates only. Short-term capital gain on which STT is paid is only taxable at some special rate. The last part is rebate under section 87A. Oh, friends, wait. Okay, you are writing it on the center of the line and putting two falling branches. You are writing it on the center of the line and putting two falling branches. I'm going to do it as a table. You will write it as two falling branches. If assessee is under Finance Act, if assessee is under 115 concessional tax regime, rebate under section 187A only for individuals. Rebate under section 87A, this is only for individuals. Okay, I'm putting it, the second part into blue is because there is an amendment to that. That's why I'm putting the 115 VAA in blue. Okay, applicable for individuals whose total income does not exceed rupees 5 lakhs. Applicable for individuals whose total income does not exceed rupees 12 lakhs. Rebate is actual tax or rupees 12,500, whichever is less. Rebate is actual tax or rupees 12,500, whichever is less. $60,000, whichever is less. That's why I said that 60,000 gets an importance there because I am going to give rebate up to that level. 60,000, whichever is less. This is one big amendment. Okay. Rebate cannot be claimed if income is taxable at special rates. Till last year, even if you are having a winnings of 3 lakhs, 4 lakhs, you can claim rebate. Even if you're LTCG, but now rebate cannot be claimed from this year, be it under Finance Act or under concessional tax regime. No question of rebate if income is taxable at special rates. Take your time, have a quick glance through. Take your time, have a quick glance. You're understanding? Okay. So the tax computation depends upon what is the total income, what is the nature of income, and dividend alone be careful. Other things will be very simple. Dividend, if it is part, then be careful. Question number 5. Compute tax under both regime. LTCG under section 12, under 112 on sale of land and building. LTCG under section 112A and business income. Let us take the 12.5% and work out that LTCG unless they give you. Question number 6 gives you that detailed information. Question number 7, question number 5 just gives you the total information. We will work out under both tax regimes. Why both tax regimes is income other than these two, my dear friends, in this question, the important aspect is income other than these two has exceeded 5 crores. Under the old tax regime, the surcharge will be 37%, whereas under concessional tax regime, the surcharge cannot exceed 25. Cannot exceed 25%. Start working. I'll also work. I'll just print the calculator. Is this coming free? If there is any computation mistake, let me know. Which one? Zero three one. Because of which the total comes down by 20. 267. 80. I need not round off. So it's 812. And it is rounded off to 810. So under concessional tax regime, maintain the first two things. Only the base tax differs for business income. And after that, the change. Surcharge will be the same for LTCG, etc. But it will be different for businesses. Is this right? Much. 43 lakh. Oh, 516. Is it clear? Okay. Just getting you an hands-on experience on computation, nothing else. Shall we? Listen to question number 6. If you want time, I'll give you. Yeah, yeah, sure, 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 sure. Shall I come in? Yeah. Listen to this question. Sale value of land 1 crore 50 lakhs. FMV as on 1/4/2001, which is higher than cost but lesser than stamp value. LTCG, business income. Assume that this land is, and we are going to do under section 115 BAC. Assume that this land has been sold in December. The index value being 100 and 376. Here is an individual. Here is an individual. The question itself, it will, in the, when you get the material, you understand. Compute tax for resident individuals. That's how the question has started. Okay. And the asset sold is immovable property. So the two options available to me is, without applying indexation, 150 minus 2110 at 12.5%, or by applying indexation 20%. Whichever is less, I can opt. Am I clear to you? Okay, let's start. LTCG under section 112 without indexation, we get the answer as 1 crore 50 lakhs minus 21 lakh 10,000. Okay, I will get an answer of, what's my answer? 1 crore 28 lakh 90,000. Okay. If I opt for this one, okay, if I opt for the rate at 12.5%, my tax will be, now I go for with indexation 1 crore 50 lakhs minus 21 lakh 10,000 into 376 by 100 into 376 by 100. 21 lakh 10,000 into 376 by 100 comes to, are you telling the capital gains or the, ah, okay, so minus 1 crore 50 lakhs minus that amount. No, no, yeah, I understood what you're saying. You're saying 21 lakh 10,000 into 376 by 100 is coming to 79 lakh. Okay, minus 1 crore 50. I am getting 70 lakh 66 400. 20% of this comes to 14,14,13280. Is that right? 14, 13 to 18. Whichever is less is my taxable amount. 14, 13 to 80. Any doubts? Income of the correct? We are getting the same. Clear? Okay, friends. Okay. Right. The turnover of a domestic company is as follows. And remember, I am more concerned about the turnover of financial year 23-20. I'm not bothered about the other years. Last year it is 410 crores. That is not my concern. The before year is for what is 23-24, less than 400 crores. The business profit is 6 crores. Compute the tax payable. We'll do under both the method. Oh, okay, we'll do under Finance Act only because that's why they have given the turnover and all. Okay. pays tax at the rate of 25% as income of FY 23-24 turnover as turnover of FY 23-24 has not exceeded 400 crores. Six crores into 25%. 6 crores into 25%. 1.5 crores. 1.5 crores. And surcharge at the rate of 7%. And surcharge more than 1 crore up to 10 crores 7%, more than 10 crores 12%. So add surcharge at the rate of 7%. 10 lakh 50,000. It's the income. Okay. Okay. It's the income which we need to see. 6 crores is the profit. 6 crores is the profit. And that has increased. Okay. Mm. 6 lakh 160, 1 crore 66 lakhs 92 crores. Shall I? Shall I? A cooperative society has a taxable income of 14 lakh 10,000. Compute tax under both normal and concessional, assuming it is main business is manufacturing and income is earned from manufacturing operation. Cooperative society. First 10,000, 10%. Next 10,000, 20%. Balance 30%. Balance 30%. Under concessional tax regime, there are, I'm going to make an assumption. Now, this is divided into two. If the manufacturing activity is from 1/4/23 to 31/3/24, then 15%. Other cases, it is 22%. Other cases, it is 22%. We are going to make the assumption that it is 1/4/23 to 31/3/24. Oh, there is also some, the question continues, sorry. LTCG on sale of land in October, 40 lakhs. For them, no issue, no option. They have to. No. Okay. Yeah. 14 lakh 10,000 minus 20,000, that is 1390 into 30%, 4 lakh 70 plus 3,000, 4 lakh 20,000. Will surcharge come? No, up to 1 crore it will not come. Sixteen, 12,000. Can I? You understood this? Okay. Base tax at 15%. It is assumed that the manufacturing operation commenced between 1st April 23 and 31st March 24. I'm making an assumption and working. 90 lakhs. 14 lakh 10,000. Sorry. But unfortunately, surcharge at the rate of 10% will come, irrespective of the level of income. Under concessional tax regime for companies and cooperative societies, surcharge will be 10%. Let it be less than 1 crore or more than 10 crores, surcharge is 10%. $9,000. Can I, can I, can I? Are you understanding this? Shall I proceed? Question number 9. A manufacturing company incorporated in 2023. So we are coming under the concessional region bracket only, which has opted for 115 BAB gives the following. Income from manufacturing activity, which will be taxable at 15%. Income from other sources will be taxable at 22%. Remember, only income from manufacturing operation enjoy the additional concession. LTCG on sale of land 12.5%. Okay, compute. Go ahead, compute. Beta 14 take. No. Okay, okay. Sorry. 16 13 040. Clear, friends? Clear, friends? Now, if in the above case, it is a manufacturing company incorporated in October 25, you will not have that special rate of 15%. It will only fall under 115 BAA and not 115 BAB. Okay, first I will write it theoretically. Okay. Companies, okay, whose main object is manufacturing, incorporated between 1st October 2019 and 31st March 2024 will only fall under 115 BAB, that is manufacturing income taxable at 15%. All other companies incorporated before 1st October 2019 or after 31st March 2024 does not have the option of 115 BAB. No. It's a manufacturing company. We have come to question number 9 now. We have come to question. All other companies that is incorporated before 1st October or after that does not have the, hence they will only fall under 115 BAA. Mail. Shall I? Shall I? Shall I, friends? Anybody still do online, friends? I hope. Shall I? A firm has a total income of 1 crore 16 lakhs, includes LTCG taxable under 112 and STCG on sale of listed securities, which is also coming under 111A, 20%. Okay, go ahead, compute tax payable. Sanjeev. Is it clear? Yeah. Okay. Keep this. Not going to be useful right now. When we do assessment of firm, we will do it. When we do assessment of companies, we will do companies. When we do assessment of individuals, we will do it. At that time, I'll do the first question. That is the marginal relief question. At that time, I will do assessment of individual because this gets repeated there also. Am I clear to you? Okay. This is just the rate of taxation for, as I said, I'm just giving you so that when we go for progress, if at all anywhere we need to work out tax, you can work out. Otherwise, it is not going to be useful now. We will see it in assessment. The next aspect we are going to go into is the first chapter of income for our classroom. That is profits and gains of business or profession. The next approximately 8 to 10 classes will be discussing on this very detailed, because what starts now will go till the end. Will go till the end. Patiently in your theory notebook. The topic is profits in your theory notebook. Profits and gains of business or profession. Profits and gains of business or profession. It's going to cover section 28 to 44. It's going to cover section 28 to 44. Okay, as I told you, for you it is a chart. For you it is a chart. If we understand the heading first, then we will go and understand everything. Okay, we should understand the heading first. Okay, what is this terminology of, okay, what are we speaking about this? What is this profit, gain, business, profession? We need to understand this before going and understanding anything. Okay, what is profit? What is gain? What is business? What is profession? Okay, we will understand this before going and understanding anything. That is the 4 branches you will have: profit, gain, business, profession. What is profit? Okay, surplus from a regular course of activity. Surplus from a regular course of activity. If I sell stock, I will get profit. If I sell stock, that's my regular course of activity. If I am providing some consultation, I'm getting profit. After the expenses, whatever I get is known as profit. Surplus from isolated or rare activity. So now to be more clear, if I sell stock, I will get profit. If I sell asset, I will get gain, because that I don't do day to day. But please remember, this chapter is going to tax some of the gains also. Even though you will feel, sir, we have a separate chapter called capital gain for that. Of course, no doubt about it. But some of the gains are going to be taxable in this chapter. If I sell a normal business asset, it will go to capital gain chapter. Suppose I have purchased an asset for scientific research, where I claim 100% of the expenditure. Now, if I sell it, it is taxable under PGBP, not capital gain. Some of the gains, very soon I will tell you some one or two gains. Okay, some of the gains. Gain means that which is not regular, recurring. It is a very rare activity. Some of the gains will also be taxable under PGBP. Okay, so don't confine this chapter to profit alone. Next chapter is confined only to gain. But this chapter is not confined to profit alone, profit and gain. Trade, commerce, and manufacture. Business means simple. Trade, buying and selling. Commerce, all support services. Transportation, banking, insurance. Okay, all these things will come under manufacturing, conversion of raw material into finished product. Okay, all these things come under business. Profession is not explained. Profession is not explained by law. Wherever law is not defining, we go by the general dictionary meaning, etc. What is profession? Give an example of profession. Obvious example. Okay, that's why, sir, I'm studying all these years. Chartered accountant. Knowledge acquired through formal system of education. Doctors, lawyers, chartered accountants, cost accountants, company secretaries, knowledge acquired through formal system of education, and don't put a full stop. Income earned through exhibition of skill. You need not. Is there a formal system of learning for many skill for acting? Only person with the acting school certificate can come and act. Only person with a music school certificate can come and do music. We would not have had Ilayaraja. Exhibition of skill, okay, is also profession. Singers, musicians, artists, actors are all coming under profession, apart from whatever is the knowledge acquired. Okay, knowledge acquired through education and income earned through exhibition of skill. May I? May I? Okay. May I? Then comes a very interesting word. Profession includes vocation. Profession includes vocation. Okay, okay, friends, friends. Plumber, electrician. You know, there is a formal system of learning also, but there is no school to certify that. That so and so can be a plumber, so and so can be an electrician. There is no school to certify that. Computer mechanic. There is a formal system of education, but there is no school to certify, and it is also skill based. It is also skill based. Sometimes in the future, we are all going to feel we should have become electrician than chart accountants because they are in demand now. They are in demand. Plumbers, electricians are much in demand. Okay, right? 15, 20 years back, every street corner had a bike mechanic. Now, 10 streets once only you will find a bike mechanic. Okay, if you want to fill air in your tire, you need to push it for a longer distance nowadays, because these type of profession are reducing, so they will become very rare. Okay, there will be in a road 5 lawyers, 3 chartered accountants, 5 doctors, 1 mechanic, and he will be serving all the other 15. Okay, so that is going to be the future. Profession includes vocation. Vocation means partly skilled, partly knowledge oriented. Again, I told you that there are some case laws for your knowledge and for your understanding, and you will not believe me, but Samiyar is a profession, vocation. They come under profession. And it will be all the more interesting for you if I tell you the case law. It is Nityananda's case law. Nityananda said, the donation I am receiving from my followers is a voluntary contribution, so not taxable, because I am preaching Veda. That itself is slightly. He said, I am preaching Veda, so the donation I am giving to my getting from my followers is not taxable. But the court said, boss, you are carrying on vocation. A father reading Bible in the church and receiving money, vocation. It is partly educational, partly skill basis. In our friend's case, yes is silent. Okay. So, vocation. Vocation is a very, because people think vocation is a profession includes vocation. It cannot be said just like that. There are many who are falling under this vocational category. Okay. Customs clearing agent. Leave alone these big houses, custom clearing houses. Custom clearing agent. There are many agents in between. They are carrying on vocation. Okay. So, vocation is also big. The title of this chapter is Profits and Gains of Business or Profession. We understood every term. Profit, gain, business, profession. How does this chapter is getting divided? Out of the 16 sections you see, 28 to 44, couple of sections are scrapped. Leave that. You will be really amazed and wondering if you just recollect your law. Now you learn. There are only two sections which speak about income. There are only two sections, section 28 and 41. 41 speaks about deemed income, supposed to be business income. And the major chunk of sections will speak only about expenditure. So the eye of the department is more on expenditure than on income. Why? We all know. Income is getting tracked by the department through so many means. GST is there, through which they can verify your sales. TDS provisions are there, through which you can say they can check if it is my expenditure, it becomes obviously your income, so they can check, cross check. So income, though we are there, it is important, we are going to understand it, but the major weightage comes under 30 to 37 expenses allowed, 40 and 40A expenses not allowed, 43B expenses allowed only on the basis of payment. So section 43 also acts as a support section. It defines various terms from here, section 43. And section 44 has two aspects, administrative, presumptive. Administrative, maintenance of books of accounts and mandatory audit. Presumptive computation, that is income computed on the basis of assumption, both for residents as well as non-residents. So if I divide this chapter, income sections are 40 and 28 and 41. Expenditure sections are 30 to 37, 40 and 48, 43B. Other 43 are support function. It will tell you how to account for foreign exchange. So we call 43 as special provisions. And 44 is further categorized into administrative provisions and presumptive computation. Are you understanding? That is how this section is divided. We are going to walk into section 28, basis of charge. Though the heading is so, it is going to give us what are all the income that are taxable under PGBP chapter. Okay, let's start. Section 28, basis of charge. Profits and gains of business, profession, and vocation, which we just saw. Okay, friends? Okay, friends? Okay. Friends, please remember, in your margin space, you are going to write 2, and in the center of the line, you are going to write compensation received. Okay, compensation received. In the center of the line, we are going to have 3 falling branches. Compensation received for breach of contract, for change or modification, and I'll come to the last branch a little later. Can I? My dear friends, let us say that I am a supplier of raw material. I am a supplier of raw material. And our friend Divya is my customer. I promise we enter into a contract that every month I will supply 1 lakh units of raw material. Based upon my assurance, she has started a manufacturing process. In few months, I am unable to supply either the quantity or it is not meeting the quality. Every agreement will have something known as penalty clause, but actually it is not penalty, it is compensation. It is compensation. If I don't supply the required quantity or if it is not meeting the quality, I am liable to pay a penalty of, for example, 5 rupees per kg of shortfall. So totally in this year, he put together, so for various months put together, 1 lakh unit I have not supplied. So she is levying a penalty of 5 lakhs. Remember, this compensation I am paying is an expenditure for me and it is a business income for her. Remember, it takes the character of gain. It is not a regular thing. That's why I said profit and gain. Gain is also taxable in this chapter. So, where I am not meeting the obligation, compensation paid. So, from the receiver's perspective, compensation received for not meeting the obligation. That is, because when we read a sentence, no, breach of contract. So, sir, this is penalty, this is disallowed, etc. No, sir, this is a general business aspect. Okay. In one of the questions later, we are going to study a contractor who was supposed to construct a flyover within 6 months, delayed it by 2 months, and he paid a penalty of 1 lakh to the government of West Bengal. What we will see? Penalty, sir, penalty disallowed. That too paid to government. No, 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 sir. Here it is a relationship of a customer and a business. It's a customer, supplier customer relationship. So any breach of contract, it will be taxable only for the receiver. It is taxable as business income. For the and the payer, it is a business expenditure. Okay, for not meeting okay, okay. So let's take that I am a company, I am appointing her as my agent to the region of Chennai for a period of 5 years. At the end of the second year, either I am terminating or modifying her contract. Either I am terminating or modifying her contract. She says, thinking that you will be with me for 5 years, I have invested in the infrastructures and so much of things. Now you are terminating me within 2 years, pay me compensation. For me, it is an expenditure. For her, it is a business income. So one time only. Okay. Termination or modification of agency or managerial contracts. my dear friends. Okay. So let us take that the same example. I am supposed to give Divya 1 lakh units and I failed to provide. So compensation, this is an income for Divya. Is this clear? Okay. Now comes another important thing. I have promised Divya that I will install a machinery within 3 months. I have promised Divya that I will install a machinery within 3 months. But I took, okay, I took 6 months to install, and for which I have to pay Divya compensation. Compensation in delay in installation of machinery. Is it income for Divya? Is it income for Divya? Yes? Okay. Right? Court said no. Whatever compensation you have paid, ask Divya to reduce it from the plant and machinery value. Repeating. Compensation for asset. Where the compensation is interlinked to an asset, capital expenditure. Here, purchase of goods. So, no doubt it is an income. Whereas, in the second case, it is not purchase of goods, it's purchase of, it is a capital expenditure. The compensation received should be adjusted with the cost of the asset. The compensation received should be adjusted with cost of asset. That is the only exception in compensation. All other compensation, if you read, it is an income. But look for an information where compensation is directly linked to an asset. Okay? Compensation. In Saurashtra Siemens case, it's our it's valid for us. In Saurashtra cement case held by Supreme Court, where compensation is interlinked to asset, the same should be adjusted with cost of asset. It will not be treated as income. It should be adjusted with cost of asset. Am I clear? Am I clear? Where compensation, very popular adjustment in our question. Assessee received 3 lakhs from the supplier of plant and machinery for delay in execution of the contract. The value of plant and machinery is 1 crore, on which depreciation of 15% is charged. This is how the adjustment will be. Now there are two things. This 3 lakhs, they have taken it to income. What we will do? Less. Okay. Compensation received, which is of capital nature, to be adjusted with plant and machinery. So we will reduce 3 lakhs. And depreciation, they would have claimed 1 crore into 15 lakhs. What they should have claimed is only 97 lakhs into 15%. The excess depreciation we will add back. The impact is always two-way. One, it is not an income. Two, reduce it from the cost of the asset and then claim the benefit of depreciation. Clear? Okay. Now, third, normal writing, not branches. Export incentive. Export incentive. Cash compensatory support, duty drawback, and sale of import entitlement license. Sale of import entitlement license. Am I clear? Okay. All types of export incentives or business income. All type of egg. Okay. In this, the popular question is sale of import entitlement license. My dear friends, I have exported to the extent of 10 crores, 15 crores, like that. Since I am bringing in more foreign exchange to the country, the benefit given, the customs department tells me, okay, boss, up to 5 lakh or 10 lakhs, you can import without paying any duty. Because you have brought in so much of foreign exchange, some 10% of the value, up to 10 lakhs, 15 lakhs, you can import without paying any import duty. I don't have anything to import. Whereas she has something to import, I tell her, if you go and import, you are paying 20% as import duty. Do one thing, pay me 5%. I'll give you my license. Sale of import entitlement license. She gives me some money, takes it. It is a normally sale of license, capital gains. No, here it is linked with business. Because I exported, I got that license. Okay, all type of so many, in some questions you will see sale of import entitlement license which has been taken to reserve. Okay, now we need to reverse it and bring it as income. Remuneration or interest or other payments received by a partner from a firm. Remuneration or interest or any other payment. Okay. Normally, remuneration is taxable under salary, interest is taxable under IFOS. But between the partners and the firm, there is no employer-employee relationship. And there it is allowed as a business expenditure under 40B, they are going to allow. Here it is taxable as business income. For the partner, this is taxable as business income, remuneration or interest or other payments received by a partner from a firm. income of trade unions, clubs and associations, income of trade unions, clubs, associations, including institutions. So for ICAI, the income is business income. Okay. Unless you meet the mutuality principle, it will not be exempt. So these are taxable under our business or profession. Value of any benefit perquisite received by a person in the course of carrying on business or profession. Okay, okay, right. Friends, the most important next compensation is this sixth point, value of any benefit perquisite received by a person in the course of carrying on business or profession. And now you all know profession includes vocation also. Now, please remember, a surgeon performed a very complicated surgery for a very renowned business person, and the surgery was successful. The businessman settled all the fees, etc. And since he is a very reputed businessman, the surgeon walked till the entrance to give him a send off. At that time, the businessman gave the key of a new car to the surgeon, saying, "This belongs to you." Newspapers carried the articles, act of gesture, etc., good heart, etc. And our taxman, there was a bulb burning for him. He said, "Boss, this is your income, doctor." "No, no, sir, for whatever is the surgery I performed, I received." "Then what for he gave you this?" "No, this is also for surgery, successfully doing it, but this is apart from fees." "No, sir, this is also part of your fees." Very difficult and very, very interesting provision. Any value of any benefit, with due regards to many fantastic people, medical practitioners. If you go inside a doctor's cabin, many things seems to be sponsored except his skin coat. Next to IPL, he only has lot of sponsors. Stethoscope, you will see a pharmaceutical company name. Table weight, paperweights. Any benefit perquisite received by a person in the course of carrying on business or profession. Okay. She is an agent of my company. For achieving target, I am giving her a gold coin. taxman will come back and say, the fair market value of gold coin is your income. And say, boss, this is because you carried on. You achieved target by carrying on business or profession. She achieved target. My company gave her an option. For all agents who have achieved target, we are ready to take them for a 3-day trip to Thailand. She has 2 options, either to join the trip or leave it off. She joined the trip. And the company said, for every agent, we spent 1 lakh totally for their stay, cost of hotel, everything put together, 1 lakh. And the taxman raised that 1 lakh is your income. She said, boss, I had only 2 options, either to go or not to go. I never had the option of encashing it. If I had the option of encashing it, those who don't go for Bangkok will get 1 lakh. That is different. I never had the option of encashing it. The taxman went back, not to leave her, but to add this verse, whether convertible into money or not. If you go, pay tax. If you don't go, I also pity you. Value of any benefit, perquisite, received by a person in the course of carrying on business or profession, whether it is convertible into money or not. In 2 questions we will see. Free air ticket provided to the agent for achieving the company did not give you money. The company gave you an air ticket. Income tax department, oh, he gave you air ticket. Did you go? Yes, sir, I go. Oh. Then please, sir, ensure that you pay 30% of that, because he is claiming it as an expenditure. Okay. Do we relate this to anything? Okay. Not an issue. Not an issue. Somewhere we will keep on doing like this, so that when you are revising, these things will be useful. Okay. When you are revising, these things will be useful. Section 194R. That is the section which says you have to deduct tax on this. You are going to just write it and keep it. When we do TDS, you will understand this. Then when you come back and prepare your notes, when you are preparing you will be easily, oh, okay, he is relating it to 194R. There, they have said, if the agent is coming and he is enjoying the benefit, you are supposed to deduct tax also. Sir, if you read that circular, it has a lot of creativity. Business conference, purely official, nothing personal about it. So no 194R. Business conference which ended with the alcohol party, our man comes. Why that should be there? Then I will tax it. Then one of the agents says, boss, I am a teetotaler. That is for your company to take care. Like this, the circular is there. Okay. Many companies, because firing of that circular itself, stopped these practices of these parties, etc. They will instead give something valuable article and deduct tax. Okay, so we will study. I'm putting it here. Then you will ask me, why, sir, in remuneration you have not put 194? because there also for that I'm going to teach remuneration separately under 40B. At that time, I'll teach the TDS also. So when we are doing the TDS along with this, no, when we read TDS as a separate chapter, we'll be able to link. Oh, this is what, this is what, this is what, and you will be able to appreciate the law better. Okay. Conversion of stock in trade to asset. Friends, conversion of asset into stock in trade, capital gains, section 45. I am Vasant & Co. dealing with consumer durables. I constructed my own office. From my shop, I took 10 air conditioners and installed in my own office. Our taxman says, boss, you have converted your stock into asset. Do one thing. Had you sold it, what would have been the fair market value? Record it as income. Take it as asset value to claim depreciation. Conversion of asset stock in trade into asset will also be treated as business income. Will also be treated as business income. Imagine DHL constructs some 20 floors. One floor, they are taking it as their office. Had you sold that floor, what would have been the price? That will be taken as your income. Because for them, every unsold apartment, unsold space is known as, okay, income. So conversion will be treated as income. Am I clear to you? Such conversions will be treated as income. There are other things like keyman insurance policy and all, which we will discuss it when we come to that. There is a separate circular where I am going to talk about keyman insurance policy. Okay. Now this 9th point is gone permanently. 8th point, we are going to discuss 35 AD. So do not worry about the other points. These are examination oriented. Other points doesn't mean I'm skipping those things. I'm going to come to, for example, I have a separate circular to discuss on how to treat keyman insurance policy. At that time, I'll tell you how it is related. Am I clear to you? This is business income. Okay, as per the section. We'll continue tomorrow morning, 6 o'clock. We'll start with the case laws pertaining to business income and then progress to section 29 onwards. Meet you 6 o'clock tomorrow. All the best. Online friends, I will ensure that the speaker works tomorrow. All the best.